October 1st, 2025, micro crude oil futures, 1 minute chart. In this video, I'll cover counter trend trading against the daily chart, 5 waves, higher lows and higher highs, internal wave failures, Camarilla pivots, DOM, depth of market data, and VWAP. So let's go out and look at the daily chart here. And I'm just going to zoom into this time frame. So this is July 30th, and from here all the way down to where price is down in here, you can see that's a negative sloping line. It's downtrending. So if we're taking a long position, which I did, then it's a counter trend trade against the daily. So let's look at the 5 waves. I've documented the 5 waves. Here's wave 1 up, wave 2 up, wave 3 up, wave 4 up, and wave 5. If you want to get into the technical details of what makes a wave, you can watch my previous videos. Waves are also just another way to think of them as higher lows and higher highs. So waves up would be higher lows and higher highs. So here's the beginning wave 1. Price goes up, pulls back. Wave 2 starts here. You can see that wave 2 is above wave 1, so that's a higher low. Wave 2 ends at a higher high. Pull back to wave 3, that's a higher low because it's above wave 2. Wave 3 ends above wave 2, that's a higher high. Pull back, this is a failure because wave 4 went below wave 3. So this is actually a lower low. And then wave 4 is a higher high because it's above wave 3. Pull back, wave 5 is a higher low because it's above wave 4, and then wave 5 is clearly a higher high above wave 4. Internal wave failures, I'll show you some examples of that. So here, where I'm flashing my cursor at wave 1, price comes down and then goes up and makes this doji. So this is candle body over this candle body. So price is no longer going down when you have candle body over candle body. And you can see that price then went lower. That's a failed internal wave. Same thing here. Wave 2, price pulls back, goes candle body. These candle bodies are above this, and then makes a new candle bodies low. This is actually another wave internal wave failure. And then you see right here, wave 3 pulls back, goes candle body over candle body, and then price starts making new lows. That's another internal wave failure. Same thing right here. Price goes above, candle body over candle body, breaks back down, another internal wave failure. So another good reason not to do counter trend trading against the daily chart. Camarilla pivots, these are the green lines. This is the Thinkorswim study, and typically during on a 5 wave move, you would expect to see that 5 Camarilla pivot lines are intersected. So here's the lowest one of where our price is. Here's the closest one. You can see it doesn't touch it. And then if we kind of zoom a little bit, I'm not going to zoom, but you can see that price intersects this pivot line, this Camarilla pivot, and doesn't intersect this one. So it actually only touches 3 of these Camarilla pivots, and we're talking about a 40-some cent range between 62 point, let's just say 21 and 61.76. So it's about like a 40 some cent range on these Camarilla pivots. So we had a 5 wave move and we didn't even tag 5 Camarilla pivots. Another good reason not to get involved with doing a counter trend trade against the daily chart. VWAP. VWAP is this purple line on my chart. So why would you want to be long this particular underline? The underline here is the future, crude oil futures. We could be trading a stock, and that stock would then be the underline. But why would you want to be long when something is also clearly under VWAP? It's okay if it makes a reversal, but this is a nasty. I mean, this is not much of a reversal. and it's not moving up quickly, and it spends at this point in time from where market opened here. Let me go back a little bit, zoom out. So from where the market opened here to finally at wave 5, it spent a good 90% of its time under VWAP. So you don't want to be long on something that's spending most of its time under VWAP. Now, I'm not really a VWAP trader. I'm just adding this to, my topic for today. DOM data, so you get this on your active trader here. So on Thinkorswim, the only data that's available is just 10 ticks above and below the price. So here's 10 ticks of price above and then 10 ticks below. So the DOM is very limited. The data feed is very limited with Thinkorswim. So I think we covered all of those points. Now I'm going to show you my trade, my two trades. And once again, this is just to show you why you don't want to be trading something that is a counter trend trade against the daily chart. It's going to be slow and it can be very painful. So here, price makes a wave 3. It pulls back right in this section. This is the wave. Let me zoom out just a little bit. So here's the wave 3 high candle, pulls back. We get candle body now, over candle body. I go long, expecting wave 4 to be made with a pullback and then a wave 5 push. My stop is down here, right below this tail at basically 79, so 61.79. So you can see I got along at 61.94 on this candle, and I got stopped out right there, right 1 penny below at 61.79. So there's a stop. Here, I got long a little bit early. As you can see, the next candle goes candle body over candle body, so this would be the candle to go long on. I got anxious, went into it too early, and then your stop would be here if you had good discipline, but I didn't put my stop here, and you can see that I continued to hold through all of this, and I'll show you my exit in just a minute. So where would the better long have been? Well, if you took another stop here, then you patiently wait if you're wanting to go long, and then here you get candle body over candle body. This is the candle right before the close. You go long on, and then your stop would be down here. So since I'm long and holding, I'm going to zoom out, and essentially price is making for crude oil at this specific time on this day is making some pretty large moves in relation to the entire chart. So I'm long here, and I've decided, okay, I'm going to put my stop below wave 2. So this is where I had my stop below the wave 2 tail, and you can see price did come down, and it got pretty darn close to stopping me out. Where should I have added? Well, when price went candle body over candle body right here, let me zoom in on that. When price went candle body over candle body, this is where I should have gotten long, or this is where I should have added. So I'm going to zoom out and let's go to where I sold. I'll zoom in on all this. Pull this down. So you can see I sold at 62.29. That's actually the high tick of this candle. Why did I sell there at 60.29? Because as price started coming up, and I saw when price hit this candle right here, probably this candle and definitely this candle, I saw 58 to 66 contracts sitting at 62.30, and because I have one contract, it's essentially no volume. One contract is no volume. I wanted to go 1 penny, 1 tick below that larger group of orders or larger order. I can't tell you if it's many orders, or I can't tell you if it's one order on the DOM. I can't tell you that this 20 is one order or if it's many orders. Same thing here. I can't tell you if this order of 13 is one order or many orders. And so why did I not, set my target up here at this higher level Camarilla pivot point, or looking left, some poor structure, fair value gap area? It's because I'm doing a counter trend trade. All of you know at this point, I'm trading against the daily chart. I'm long. The daily chart has been downtrending essentially for 2 months now. And the number of the way the Camarilla pivots are stacked is I've got 1 here, 2, 3, 4, and 5. So they're all in a pretty tight range, less than one, it's basically $1 is where they're stacked. So even to hit 5 Camarilla pivot points, it's only $1 range today on crude oil futures. So I'm just going to be cognizant of that, cognizant that I'm counter trend trading, and get out. So it was a tiny win on the crude oil futures today, and I hope this video indicates why it doesn't behoove you to do counter trend trades. Let's just pick Amazon here. Okay, so here's the daily chart for Amazon so far. So you can see price does dip below the VWAP, goes above, pulls back, consolidates down here, and then pops back up. And then you can see that price then trends up for the rest of the day. And when it does come back down, it is holding VWAP. Now, once again, I'm not a VWAP trader, but because I'm more of a wave trader, but here's the low, and here's a wave 1 high, pull back, wave 2 end, pull back, and let's just call this the wave 2, pull back, internal waves, just consolidation, wave 3, pull back, wave 4, pull back, wave 5, there you go, and there's a 6th wave move up there. How many Camarilla pivot points were hit? Okay, we've got 1, 2, 3, 4, 5, 6, 7, 8. So those Camarilla pivot points go from, call it 217.25 to 222, and off the top of my head, Amazon is probably trading in about a $4 range now. So that would put you up from 217.25 up to 221.25, which would be right here. Maybe the average trading range is a little bit higher, and so that's why then you got this nice push all the way up into this Camarilla pivot point here. This is another example of a better trend. So compared to the crude oil, which I was trading, trying to go long, right, and went long under something that is clearly downtrending for 2 months, and making these waves with multiple internal wave failures, and you can see it was a struggle and a challenge, as compared to Amazon, which just had a much nicer move today. Sure, you can go look at other things like Tesla. I'm not going to. You can look at Nvidia. Nvidia pulls back and then makes a nice breakout. Let's just zoom into this real quick. So Nvidia comes down, wave down, pull back, wave 2 down, and then wave 1 up, pull back, doesn't make a new low, wave 2 up, pull back, and wave 3, now we're clearly above. We're starting to challenge, the opening range, and then the blast off into wave 4, pull back, wave 5, pull back, and then a wave 6 and a wave 7. So you can clearly see that doing counter trend trades, and Nvidia has been on a uptrend for essentially since April, at the end of April. So much easier to trade something that's clearly on an uptrend, going long on something that's an uptrend, versus going long on something that's on a downtrend. Thanks for watching.